How's it going, everybody? I'm the BTC Reaper, and my goal on this channel is to teach you how to reap the rewards of trading, whether price is going up or down. Wrong button. Why January CPI report could deal a massive blow for the stock market and crypto market as well. That's why I looked it up. January CPI reading from the Bureau of Labor Statistics, which tracks the change in prices paid by consumer goods for goods and services, is expected to show a 6.2 rise from a year earlier, slowing from a 6.5% year-over-year rise seen in the previous month. Stay around till the end of this video and you'll see why this is all a big joke. The core price measure that strips out volatile food and fuel costs, there's one example why, is expected to raise 0.4% from December or 5.5% year over year. Any core reading under 5.5% would likely be a short-term upward catalyst for stocks, and any reading above 5.5% would likely be viewed negatively by the markets over the very short term. Fed futures traders were pricing in a 76% probability that the Fed funds rate will reach 5 to 5.5% by May. So the goal of the Fed is to keep inflation around 2%, and that is considered normal inflation. Anything above that is not normal inflation. So there's a lot of people that want it to be 2.5%, but 5 years from now, but we'll see what happens. So here's where they get to how it's a big joke. Adding to potential volatility is the new weights for the CPI calculation by the Bureau of Statistics, released Friday. The Bureau changes methodology for using consumption data during the 2-year period to only 1 year to weigh the CPI components. On top of that, they also updated spending weights used to calculate CPI. For example, the weighing of shelter will raise to 34.4% from 32.9%, while food will fall from 13.9% to 13.5%. And then the price for used cars and trucks will drop from 3.62% to 2.66%. So they just manipulate what weighs more heavily depending on what's going to happen. They know gas prices are probably likely to increase, especially now that there was a pipeline that got blown up. So they're trying to lower the weight of food and gas, because food will increase due to gas prices majorly. Draft EU rules will force banks to give cryptocurrency highest risk rating. This article is written a little more to be more fearful than I think it should be. Under new draft EU rules, banks holding cryptocurrencies may soon be forced under law to assign the digital assets the highest possible risk rating. Banks would need to give all their crypto assets exposure to a proposed risk weight of 1,250% until December 2024, meaning they will be forced to hold an equal amount of capital matching the crypto that they hold. These rules are still set for parliamentary approval. They are not in law yet. Well-known cryptocurrencies such as Bitcoin and Ethereum would be considered a Group 2 crypto asset according to the documentation. Group 2 assets are then subdivided into 2 groups by the committee. Group A, which covers crypto holdings that are made via ETFs or other derivatives, which can be traded on regulated public markets, and Group B, where this isn't the case. So for like the US, everything would fall in Group B, because we don't have Bitcoin ETFs because Gary's doing such a great job blocking them, according to Elizabeth Warren. Group 2B assets will be given a proposed risk weight of 1,250%, whereas Group 2A will be subject to lower requirements. So if the US adopts laws like this, they would fall under that high risk category. However, other forms of crypto assets, such as tokenized versions of traditional assets like equities, some types of stablecoins which don't rely on algorithms to maintain their price, and potential CBDCs, would fall under lower capital requirements and are considered to be in Group 1. They don't really say much more in this article about how all this documentation is. So, hopefully we don't see that pass. Paxos says it's prepared to vigorously fight the SEC lawsuit. Paxos confirmed Monday it received a Wells notice from the Securities and Exchange Commission stating it's prepared to take on the agency in any enforcement actions related to stablecoin Binance USD. A Wells notice is an official letter from the SEC that informs recipients the agency is preparing to bring a potential enforcement action against them. Enforcement action against the company for not registering BUSD as a security, specifically. Paxos disagreed with the SEC's beliefs that its Binance USD token is a security, stating that it prepared to vigorously litigate or fight them in court, the disagreement if it's forced to. Paxos categorically disagrees with the SEC staff because BUSD is not security under the federal securities laws. The company said in a statement, "To be clear, there are unequivocally no other allegations against Paxos." So they're saying, hey, don't try going after us for something else because you can't go after us for this coin being a security when it's not a security according to your laws. A statement from Paxos comes as the company announced it would stop minting a new BUSD, a stablecoin issued by the company that's pegged to the value of the dollar, issued under a licensing agreement with Binance, the largest cryptocurrency exchange. Paxos said it would end its relationships with Binance in a statement released Monday. The company assured customers that while its relationship with Binance is winding down, customers would still be able to redeem the stablecoin for at least a year. Binance and Paxos established a partnership to launch BUSD in 2019. When it announced that it would no longer issue new BUSD, Paxos said it would be working with the New York Department of Financial Services as it brought its BUSD offering to a close. They have overseen the process for issuing BUSD on Ethereum, ensuring it's fully backed by US dollars through regular examination. So, that right there tells you that the fault doesn't lie with BUSD. And by fault, you'll see what I'm talking about. But BUSD is also offered as a token on the Binance Smart Chain through a process that Binance admits has not always been flawless. The balance between Binance pegged BUSD and BUSD issued by Paxos and held as collateral has slipped a significant amount on multiple occasions, according to data that was compiled and analyzed by Jonathan Reiter and Patrick Tan of blockchain analytics from Chain Argos. The difference exceeded $1 billion on 3 occasions between 2022 and 2021. The research found within the amount of BUSD on Binance Smart Chain exceeding the collateral that the exchange held. So, Binance owed is a FTX situation, which is why FTX said, hey, you're no better than me, you just didn't get caught. Recently, the process has been much improved with enhanced discrepancy checks to ensure it's always one-to-one pegged, they said. Hopefully they've done this. Well, I guess we'll see as the SEC is making their rounds, and they may be one of their next targets. Bitcoin miner, well, they'd have to go after Binance US instead of Binance, which can be difficult to do that since they don't control the BUSD token. Bitcoin miner Iris Energy expands data center to triple hash rate. After facing a massive debt crunch in November, Iris Energy announced on Monday its hash rate is recovering to pre-FTX levels. Over the coming months, the Bitcoin mining firm's self-mining capacity is slated to increase from 2 exahashes per second to 5.5 exahashes per second. Iris Energy has successfully utilized remaining payments of $67 million under its 10 exahash per second contract with Bitmain to acquire 4.4 exahash per second of new S19J Pro miners without any additional cash outlay. There was something else, but don't know where that went. The hash rate increased more than The hash rate increase more than compensates for the company's 3.6 exahash per second loss in November when it was forced to unplug a swath of mining machines used as collateral for $103 million in loans from creditors. Like many mining firms at the time, a combination of rising energy costs and Bitcoin's decrease in price left it unable to produce enough cash flow to cover its debts. However, Iris now states that its existing obligations under its 10 exahash per second contract with Bitmain are now fully resolved and that the firm is now debt-free. To raise further funds, Iris also considered selling any surplus miners that bring it beyond 5.5 exahashes per second in mining capacity. This will be reinvested into growth initiatives and/or corporate purposes. So now onto the charts. So you can see we came back down and tested our support level, like I said, to watch out for from yesterday's video, as we got rejected from our ascending triangle that we had. We do have a bullish divergence highlighting now on the 2 hour. It wasn't highlighting before, but now it finally is. You can see that highlight kind of lags, but you'd rather get in on a little bit of a lag than jump in. So you'd want to see like somewhere on this pullback possibly. Not financial advice. Alright, we do have a green dot here, which signals bullish movement. Our momentum wave is coming up. Our VWAP is crossing up. Our money flow rejected a cross up though. Our RSI is starting to point down, however that's just because we have a red candle. For the most part, it's continuing upwards. Our stochastic is heading upwards, meaning that our RSI has strength. So that is a bullish sign on the 2 hour. If we look at the 4 hour, we are getting a bullish divergence highlighting here as well, which is a good sign. We are getting a slight pullback right on this SMA line. If we break it, that would be a little concerning. We could invalidate this. However, if we do manage to push off it, that would be good. However, SMAs are also a lagging indicator, so I wouldn't put too much weight on them. Our RSI is bouncing off this neutral area, so that is a positive look. We do have a bullish cross on our stochastic, however, it kind of looks like it wants to round off, so that's not the best thing right now. We'd want to see the 2 hour and lower time frames continue to keep moving us up. Oh, our money flow is trying to get above that neutral zone too, and our VWAP is in the bullish zone, so we'll want to see that money flow continue to move up. If it starts to stagnate out, that would be a little bit concerning. If we look at the daily, you can see our RSI is still kind of just like flattening out and not really going anywhere. Our stochastic's still doing the same, but our money flow is starting to come in. Our VWAP is somewhat crossing this neutral zone, so I look for tomorrow's candle most likely to see where we're going to be. If we do get above this money flow, that would be a bullish sign. However, if we continue down, we're going to reject that money flow cross, or that VWAP cross, and then that would be a bit of a bearish sign, as we could continue downwards from there. Our stochastic not picking up on the daily also suggests that we don't really have too much strength here, and our RSI is about to die. Like, if we don't get any volume here, this RSI could easily start to fall down, which would give us another indicator that we have some weak movement. If we look over at the 15 here, our momentum wave's pretty high. We're getting a new high. We have a red dot. Our money flow is in the green, however it's easy for it to go up and down on the 15 minute as it doesn't take much. Our VWAP is coming down, so that's a little bit of a bearish sign. We may come back down and retest one of these lower levels, however, like I said on the daily, that would not be good because then we'd break our SMA. The 2 hour. Then we break this SMA. If we get this green line to come up above the yellow line, that would be a bullish sign. But if the yellow line ends up on top of the green line, then that could be a bearish sign. If we look at XRP, we've made our full breakdown on our bear flag that we had. So if we don't gain some momentum on Bitcoin or in the altcoins, then we would likely see this continue to come down. We do still have this head and shoulders. If we do, it'll be likely that if we don't hold at this 35 area or hold here, then we could complete this head and shoulders down around this 33 area. If we do that and we don't gain any momentum, that could spell some danger for XRP. The 2 hour, our stochastic's curling down and our RSI is curling down too, so those are bearish signs, and our momentum wave is starting to come back down as well. Our money flow is coming out as well, so not the best look, nothing too positive on the 2 hour. If we look here at Algo, we are still breaking down from our ascending channel that we had, Our stochastic is pretty weak, and our RSI is still continuing to fall. Our VWAP is trying to come up, and our money flow is trying to come up. So we are trying to get a little bit of a bounce around this point of control area. Over on the 4 hour, you can see that our stochastic's kind of wavering. It made a slight bounce off this neutral zone. However, it looks like it's going to start coming back down. So if our stochastic starts to roll over, our RSI could easily come back down. At that point, it would probably enter the bearish control zone. Our momentum wave is pretty oversold, but I wouldn't rely on that carrying us up alone. We do have a bullish divergence here. However, this may have been the play out of that divergence. If we look at the 2 hour, our money flow is starting to come up, so that is a bullish sign. Our VWAP's coming up pretty strongly, and our RSI is going up pretty strongly as well. So if this were to continue, much like Bitcoin, then that would be a bullish sign and could help drag us higher. However, if we start to roll over from here, and let's see how the 15 minute, if the 15 minute will load. There we go. Not sure what happened there. 15 minute, you can see our money flow is kind of going flat. It's sort of coming down, not too aggressively. Our VWAP's kind of peaking down. Our momentum wave looks like it's about to curl down, so we may get a little bit of cool off on the 15 minute as well. If we break that support level that we have on Bitcoin, then it's likely that we could fall even lower. If you look, I'm referring to the 21.3. If we break that, and we'd want to hold this 28 level to stay bullish. If we break this 20.8 level, then I would no longer feel that the bull market could come back, and we may see Bitcoin act a little differently in the recessionary kind of atmosphere that we have than it has acted in its normal 4-year cycles. Thank you for watching tonight's video. I hope you have a wonderful night.